Okay, everybody, it's me, Gregory Mannarino, and we have to talk. Let's talk, you and me. We're friends, right? Some of you have been with me for so freaking long, and I just love that. Anyway, people, let's do that. So it is still twos across the board. February 22nd, 2022. So where to start? Where to freaking start? All right, let's talk about the market. It kind of helps me get my act together here. So we had a market today which fell under pressure. Not a surprise to a single one of you out here. You look, no one knows this market better than you do. Although it seems that there are a lot of experts out here. We'll talk about that too in a moment. Yeah, I consider you an expert if you follow this blog. You know where to look. You understand what's going on. You have yourself in the right spots. You're positioned correctly. You are hedged. And like I said, we have a lot of stuff to talk about. So on the back of whatever the freak is really going on over there, yes, there is fear. And I have to say yet again that people, I want to say rightly so, but I'm not convinced about that. There is almost too much fear in this market. There are people writing to me by scores and scores. I can't even keep up with it. People are concerned about what the market is going to do. Look, if you're really that worked up and that afraid to be in this market, I'm not sure it's the right spot for you. Let's put this into a bigger perspective. Let's just go back to the beginning of President Trump's presidency, where I said on Greg Hunter's show that this market was going to skyrocket. We're going to see record high, record high. So let's see. All through President Trump's presidency and through all Biden's presidency up until December, this market has gone straight up. And everyone was happy. Now all of a sudden you're dealing with geopolitical issues, some turmoil in the market, and people are ready to throw in the towel. Let's put another perspective on that. Let's say you are a Wall Street hedge fund. Let's say you are a Wall Street investment bank. How would you deal with this situation? You would just dump all your stocks? You would start becoming bearish? Or would you look for specific companies to put your money to work that you believe are fundamentally freaking cheap? And we'll talk more about that too in just a moment. Look, any hedge fund, any investment bank that would act so irrational to be panicking and having fear, they would fail in a matter of months. You can't just sit back and enjoy the times where the market is going up year after year after year after year and then complain when the market just doesn't do what you want it to do for a couple of months, and then you're panicking, you want to run out the door, then go do it. I don't know what to tell you. Look, the market consists of buyers and sellers. If you own large cap dividend paying stocks, I'll buy what you are selling. Okay, that's really the truth here. I also want to talk about some energy companies that we should be looking at. Anyway, so look, I'm really kind of sick and tired of hearing people tell me, oh, Greg's been on the wrong side of this market. You have no idea what you're talking about. None at all. All right. I'm collecting dividends from the positions I own. I trade around those positions. Generally, I am selling puts onto the market, so I don't really care if the positions I own are under some pressure at all. I'm still making money. Look, there are more than one ways to skin a cat. It seems like many of you out here are so fixated on just buying options, calls and puts and this. Look, that's amateur hour in my view. That's freaking amateur hour for the most part. You want to be in this market, you got to understand what you're looking at from a bigger perspective, okay? Having companies pay you to own their stock, trading around these positions. Look, really, and I'm going to say this one last time. If you are so fearful that you are panicking as to what's going to happen, get out. Sell your positions, close them today. Me, I will remain in this market. I will remain hedged, and I will continue to buy companies that I feel are undervalued. And to me, right now, and I've been saying this for I don't even know how long, it's banks. And it's going to be some oil. And as a matter of fact, let's touch on that. Oil and gas producers, all the big ones, the blue chips, okay, just if you subscribe to my free newsletter, as a matter of fact, I'm not even going to tell you which companies these are. I want you to subscribe to my free newsletter. Link in the description of this video. I'm going to stop repeating myself. Okay, I've been telling you to subscribe to my free newsletter. Earlier today, I put out a newsletter, 100% free, which included several companies, oil and gas, blue chips that pay dividends that you should be looking at because we expect, and I know I do, energy to surge higher. This is how you stay ahead of the market, people, okay? So you want to find out what those companies are? Right now, finally, subscribe to my free newsletter, like I said. I'm not going over this again. Let me ask you while we are on that topic. If we understand, well, let's put it a different way. What do you expect governments of the world and their central banks are going to do in the current environment with what's happening or may not be happening over there on the Russia-Ukraine border? Do you think they're going to stop spending, or do you think they're going to increase spending? Well, I think they're going to be increasing spending. And what does that tell me? And what should that tell you? If you can expect government spending around the world to increase, debt is going to vastly increase. That means fiat currencies are going to be decimated. You think that's stock market negative? You really think that's stock market negative? Good for you. Start shorting this market and see how that works for you. Maybe you'll make money for a little while, but in the long run, you're going to get it wrong. And you're going to get decimated here. That's really the truth. Like I said, if you are a person that only buys options and looking to get short, that's a very specialized field. I did it for many, many years. I can't do it anymore. I don't want to do it anymore. I've outgrown it. Quite honestly, I feel like it's a young man's and a young woman's game. I just can't sit here and, worry about every single tick that an asset is going to go under. Or, forget about it. I can't do it anymore. It just ain't happening. So I've chosen a different way to capitalize on this market. I think it's a lot safer. No major swings in the bankroll. And I can sleep at night, staying hedged. And it looks like a lot of you can't sleep at night. The stress level that some of you seem to be under is off the Richter scale. I mean, I cannot keep up with it. And you got to get out of this market if that's what it's doing to you. It's crazy. So on the back of this market here, falling under some pressure today, no surprise to you, what did the 10-year yield do? Because I know that you're watching the drivers. It came down. All right. We are not fearful at all of the 10-year yield dropping. We just are worried about a spike. That means there's instability in the debt market. The debt market remains stable. And as I just asked you in that question, what do you think governments are going to do? Are they going to really cut back on spending here? No. They're not done. Central banks are not done. And they're going to use this as an excuse to continue to inflate. People, again, look, what do you think is going to come out of this? Do you really think everything's just going to be beautiful here? They are engineering an energy crisis, if you must know the truth, okay? And you're in it. You're in it right now, in the early stages of it. Central banks are, again, going to use this as an excuse to continue to inflate, as central banks always do, all right? And their respective puppet governments, who aren't the real government, are going to call on these institutions to support the economy and the market. Now, if you're smart, you will try to get in here and buy companies that you believe in on the cheap, okay? That's just the way it works. When people get fearful, and there is fear, that's when people like myself continue to pounce, all right? I will buy what you're selling. And then you and I are going to look back in 5 years and you're going to say, wow, I sold that company XYZ at X, and now it's worth this. Gee, I wish I would have held on to it. It's the same story over and over again. You have to have some understanding of the markets and the ability to recognize when things are cheap. And in my view, because I don't think global spending is going to stop, everything's on the cheap right now. It's going much higher. Energy, forget about it. And it's all based upon a dying dollar and fiat currency that's being under attack by central banks. And it takes more weaker dollars to buy anything, even shares of stock. So, you do the math here, people. So, Bitcoin today, 38,000. Should you be buying here? That seems like the question I keep getting asked. Look, people, I've been telling you to buy Bitcoin since around 3,000. All right, I told you to buy at 10. I told you to buy at 15. I actually told you to buy it at 41. That was my last buy, 41. So we are now below my last recommendation. Like I said, we're at 38,000. But if you've been in it as long as I have, to say the least, you're a happy camper. You're a very happy camper. Let me put a perspective on this again, because people don't seem to hear, as my ears are over here, what I'm thinking or what I am saying. I am holding cryptocurrencies because I believe, and you can have your own opinion, and I would love to hear it. When we get the inevitable debt meltdown, okay, you're going to see cash move into other assets. One of them, I believe, is cryptocurrencies. And I have explained to you that I believe the market capitalization of cryptos is going to go up 3, 4, 5-fold. So you tell me, should you be buying here? If you can understand that these are extremely volatile assets, 50, 60, even 70% swings of the price action are normal. If you can deal with that, and understanding why you're holding it, well then yeah, you should be buying cryptos. If not, you should be getting out too. Don't buy anything that keeps you awake at night. Don't invest. Get out of the market. Get out of every aspect of the market. Don't even think about it, because you're obviously not in the right spots. You don't have the mindset. This market is not for everybody, okay? It's not for everyone. You got to be able to enjoy the times when the market's going up year after freaking year, and you have to realize that it's not always going to be like that, and you got to ride it out at those situations here and look for value. Look for things that you feel are cheap while you collect that dividend, while you're trading around those positions, selling puts 15, 20% out of the money, and just collecting the premium and just lining your pockets. It's not a hard business to do, to be in, honestly. You just got to know what to look at. And if you're focusing on the debt market like I am, you're laughing. You're freaking laughing at all this. Let's touch on a few other things here, people. Gold and silver did well today. Very happy to see that. You know you should be betting against the debt, becoming your own central bank, period, the freaking end. With regard to these oil and gas companies, look, I'm not going to tell you which ones they are. I'm not going to. If you are a subscriber to my newsletter, you know which ones they are. So do yourself a big favor and subscribe to my newsletter. It's free. Let's talk a little bit more here, people, about home prices. So we got this lovely piece of economic news today. Oh, but our economy is booming. You know that. U.S. home prices rise at their fastest pace in over 34 years. This is part of the inflationary freak show that we are in. And the inflationary freak show is going to get so much worse. And you got to you got to think about how you want to capitalize on it. If you don't want to trade this market, that's fine. But how are you going to hedge yourself? What do you want to do? Okay, I cover every day what I think you should be doing here in this market, how you should be taking advantage of it, and how you should be preparing for the inevitable meltdown or the implosion that's going to occur in the debt market. It can't be easier, really. I think I'm the most easy guy to follow and understand with regard to how to capitalize on the current situation. And, you know, it's not that hard. It's really not hard. All right, anyway, people, look, I covered a lot of stuff in this video, and I don't want to keep it too long because people seem to not like them when they're that long. It's true, honestly. I get more complaints about more bullshit things you could possibly imagine, but that's, I guess, what it's like to be me. But with that said, people, look, I love you a lot. Cover a lot of stuff here. And we will talk in the morning. Consider your positions. Consider what you are doing and why you are doing it. If this thing is getting to you, if you are so worked up about what the market may or may not do yourself the biggest favor and get out of the market. Just close your positions and sit tight. That's it. Until there's a time that clicks with you. Look, like I said, this doesn't work for everyone. You got to know what you're doing. You can't just fly by the seat of your pants here. And a lot of you are still locked in this buying options business. I'm out. I don't do that anymore. So our perspective is vastly different. Okay, I am a net seller of options. I want to collect premium all day. All day, I want to collect premium, collect premium, collect premium. That's it. That's my business right now. While I'm hedging myself, keeping myself in the right spots. And this is not a hard thing to do. All right, look, I'm out of here before I get more wordy. I will see you in the morning. I'm out of here.